Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, November 4th, 2022. As always, please don't forget to hit the like button, subscribe to this channel, and share this video with others. The more people like this video, the more people will see it and more people will benefit from it. So again, don't forget to hit the like button. Probably a relatively short video. I will look at stocks. Stocks, especially NASDAQ, really was staring in the face of the abyss today on Friday, November 4th. But they pulled away from it. So we'll see if the bear market is over, and how would we even know if the bear market is over. Dollar also made a huge move to the downside today. This is Friday again. For the week it's not as decisive, but I'll show you how commodities are reacting to this. Gold, copper, natural gas, and oil all rallied strongly on the heels of this news. And Bitcoin also, we'll look at it. Could it rally? Yes, it could. Possibly 40% or so. So we'll look if it's worth it buying it now. If you are a subscriber, stay tuned. We're going to cover all of these stocks, various stocks here: Brazil, Amazon, Caterpillar, Google, Goldman Sachs, AMC, also interesting setup, and United Airlines, etc. So if you're not yet a subscriber, consider signing up by going to the link in the description. I'm going to be using my indicators throughout the presentation. These are available on my site. Also, newsletter is available as well. So let's get to it. So we're looking at S&P 500 currently. On this chart, again, I'm going to show you these lines. This green, blue, red, and yellow lines are my trading indicators that I use pretty much exclusively for trading. So currently, looking at the stocks, this is S&P 500 on Thursday, October 13th, right there where I'm hovering. Stocks dropped initially, but then rallied. So this is what's called a hammer candlestick. When stocks drop initially in the session and then rally by the end of the day, especially if it's green in color, then it's a very good sign. Consider it a very good sign. Consider a sign of a bottom. Is it the absolute bottom? We don't yet know. However, there are good signs. So number one, notice this yellow line. We broke above it a couple of weeks ago and moved towards this red support resistance line. So for now, we're still thinking that we are in the middle of what's called a bear market rally. Stocks are continuing down. I mean, these are 52-week lows, so 52-week lows imply a downtrend. However, the bounce for now is still considered a counter trend rally. So we're approaching this red support resistance line. So before recently, we were able to sell the stock market short there. There was one really good signal here on 26th of August, and another excellent one September 13th. What we need to see a high above this red line and a close below it. We haven't actually gotten there yet, so we'll need to watch and see what happens. Now, this entire week we've been selling. You can see here, selling. Finally, I'm going to zoom in on this action. So yesterday on November 3rd and today November 4th, we tried to get through below this yellow line, which is at 3720 currently. And today the same thing, we tried to get below it, but we failed. So for now, I'm going to say that we have retested the support and we held it. Now this support is quite important because I think that if we don't hold here, we could easily continue lower towards new lows and possibly even take out these lows. Now for now, S&P 500 is holding these lows. If we continue higher towards this red line, which is currently 3991, we will see what the price action will look like, and if it looks like the support or the resistance at that point is not going to be holding, we will see that it will break above it, and it will not be like subtle. It will be just like probably a big candle. However, if there is resistance, will reaffirm itself, and we'll see the price coming up towards it and kind of bouncing off of it, and finally making a kind of rolling over. Then we'll consider selling it short there. Now, the way things are going, it's not entirely out of the question that stocks will continue significantly higher, and the bullish levels are actually not that far off. They're at 43.18. So from today's levels, bullish levels are 14% away. I mean, it's not that close, but it's not like out of the reach. So if stocks can, break above this red line at 3991 and then continue higher towards the blue line at 4318 and close above that level 4318, then we'll say, okay, we're now in a bull market. Again, we'll be watching it very closely, and for now, it's not very decisive. At the very least, the bulls can say that the support has held at the yellow line 3720. Bears say that we're so close to the lows. So let's see what happens. Dow Jones, notice it's actually a lot stronger than S&P 500. Notice how big this rally is. Notice that we actually broke above this red line on October 25th, and we are approaching bullish levels. For Dow Jones, bullish levels are at 33,758 currently. If we close above that level, we will say that we are no longer in a bear market, we're now in a bull market, and we will start buying stocks and the indices. Same general principle, but Dow Jones is stronger than S&P. So notice what happened. We closed above this red line on October 25th, and then we came down to it yesterday on Thursday, November 3rd. We touched it and then bounced off of it today. So this looks like a decent, pretty good looking chart, and we're not far off at all from bullish levels. Bullish levels are only like 4% away. So Dow Jones is stronger than S&P. However, I will look to S&P for a final decision. If the S&P closes above the blue line, then yes, we definitely are in a bull market. For now, it's a really good sign that the Dow Jones has not broken yet below this red line, so there was no short signal. So you can see short signals, for example, right there on 26th of August, and another one on Thursday, September 13th. This has not yet happened, so support has held, and we will see again if we're going to continue higher from here. Now, NASDAQ is surprisingly weak compared to the previous two I just showed. This is NASDAQ. So NASDAQ did close barely above this yellow line on 25th of October, but rolled over, and actually yesterday it was a new closing low. It was not a new low because the low was right there on Thursday, October 13th, but on November 3rd here we actually made a new closing low. So not a very good sign at all. Now, there are many weaknesses within NASDAQ. There's a lot of stocks that are quite weak, like Meta, also known as Facebook, Google, Amazon. So they all moved significantly lower, and that's not a great sign, obviously. Today, we were actually I thought we were gonna collapse. I thought we were gonna close below those yesterday's lows and then just unravel completely. But actually, at the very end of the session today, stocks rallied, and NASDAQ ended up closing green. So far so good. Let's see where this takes us. It's possible that Monday we will gap up. There's also a possibility on Friday that we'll gap up. I'm sorry, not Friday, on Sunday night when the markets open, we might actually gap up. There is a good chance of that. So let's see what happens. NASDAQ is pretty far away from bullish levels. Bullish levels are at 14,400, so that's still ways off, 32%. Having said that, if you're a kind of like a bottom picker, right now is super low risk, because if you buy it right now, your stop is below the recent lows, and that's a few percentage points, while your potential gains are actually significantly higher. So let's see what happens. Perhaps the bottom pickers are going to come in and start buying, which is fine, and we'll see where this takes us basically. Russell is sort of in between. What's so far, again, you notice that it held support. So on Thursday yesterday and today on Friday, November 4th, we touched this yellow support resistance line and held it. We did not close below it. Also notice how the indicator lines are kind of curving down. Where I'm hovering, they're curving down. We can look into the future by projecting the indicators forward. So notice that the indicators are actually curving down into the future, and notice that the indicator lines are coming towards the price action. So into January, this is going to play out. This is good news for the bulls, because bullish levels are getting close to price action. So if we look into the future, so to speak, the bullish levels are actually pretty close for the Russell. We're only like 8% away, but those bullish levels are in January. So let's be patient. I think next couple of months will be quite important for multiple reasons. I think also war in Ukraine, somehow I have just a strange suspicion that things will resolve in the next few months. Hopefully Putin will be put to, just made no longer the president of the former Soviet Union. That would just simplify so many things, because everybody wants peace, except for one person in the world, literally. So let's see what happens. That's an aside. Most likely the stock markets are already pricing this in. So as they say, news are discounted into the price already. So price discounts all. Price discounts everything. So that's why that's the reason why I'm pretty much only looking at the price, and I'm pretty much ignoring all the other news. Okay, so this is a dollar index, DXY. Notice we're next to the highs. We made the high on Wednesday, the 28th of September, right there. And at that point, I was like, this just looks like we're topping out. We had a couple of extra bearish candles. One is right there on Thursday, the 13th of October. Another bearish candle right there on 21st of October. Why are they bearish? Because prices came up, but then the prices, but by the end of the session, prices actually sold off. So notice there's a tail at the top, right there, for example, on 21st of October. Tail at the top, and the body is actually, the real body is red, and the close is next to the lows of the session. So this is a clear bearish candle, a shooting star candle. So several days here from 27th of October until yesterday, the 3rd of November, we were rising, and then pretty much everything was negated. Today was this big red candle. So this big red candle is close to 2%. Now it doesn't look that huge in the context, because notice that we've been rising. The dollar index has been rising since I called it right there back in July of 2021. It rose just really huge. It went from 93 or so, 92 towards 114. For a currency, it is a huge move. So right now I have a feeling we're tapping out. And then today's move caused a big move for various commodities. Most importantly, I think, is gold, because we're watching, because gold is sort of important, I don't know, for inflationary purposes, and just in general, I don't know, for various reasons, I guess it's important to watch gold. The reason being is because gold is traded in dollars. It's XAU divided by USD. I mean, you can also trade it in euros, but you know, for our purposes, we're going to look at gold as traded in dollars. So here's XAU divided by USD. So this bottom part of this equation, USD, has been getting stronger and stronger, and notice has been pulling this currency pair lower. Again, this is a currency pair. Gold is a currency pair. Gold divided by US dollar. So notice what happened today. A dollar dropped, gold rallied, and this is a very bullish candle today. This is a super bullish candle. Additionally, because we had a potential hammer candlestick right there yesterday on right there on November 3rd, there's a potentially hammer candle. I mean, it definitely looks like a hammer candlestick. Again, hammer because it looks like a hammer. This tail of the bottom looks like a handle of the hammer, and there is the red head of the hammer. So ideally they should be green, but sometimes they're red. And what's kind of good is that today we had a big confirmation. So hammer candlestick was a big confirmation. And now we're looking at a potential triple bottom. So I'm going to show it to you on weekly chart so that you know what I mean for the gold. And it is a potential triple bottom. Here it is. 1 week of 26th of September, second week of 17th of October, and this week 31st of October. So notice there prices just couldn't come down anymore. So potential triple bottom here in this area of about 1620 or so, 1620, 1618. This is, you know, again, if you're a bottom picking kind of person, kind of trader, then the risk is super low right now. You can just be buying, let's say you can buy it somewhere in this 1650 area and then put your stop below the recent lows. That's your risk, but the reward could be quite large. I mean, if we continue at least towards the red line 1780, but possibly we make a high and go into a bull market, which is at around 1900, and then gold could actually continue higher to new highs. So we'll see what happens. Right now the slight dollar weakness is being, this is a dollar weakness. The commodities are taking advantage of it. Gold is a commodity and a currency pair. Copper did the same thing. Big candle. I mean, hard to ignore this. I mean, notice there's just nothing like this in the past few months. I mean, really giant green candle. Over 7.5% gain for copper. Good news. Yeah, definitely. If you're a commodity bull. So maybe we have prevented, or rather avoided, another Great Depression. Maybe, and again, I'm coming back to war in Ukraine. I'm just hoping that these are some sort of a sign that we're coming to an end of it. It's a possibility. Oil, same thing. Big green candle. So previous short signals we did not take. They're purple in color. I didn't take those signals here on October 22nd. A big green candle today. Yeah, we could continue higher. I think again because of the dollar somewhat weak. Oil is taking advantage of that. So again, let's see where that takes us. And of course, natural gas also. It's a very volatile commodity, so not for the faint of heart. We've been just kind of trading back and forth around here, but I think this is a final correct breakout. I think the direction is now up. This downward direction has worn its, I mean, I think it's exhausted. I think we'll continue higher, at least towards this 7.5 area and possibly even higher. Maybe we'll break out above it. So let's see what happens. Maybe I'm completely wrong about the war. Maybe in fact it's the opposite that's happening, and commodities are getting more expensive because they're gonna get more scarce. So I hope I'm right, and that this is not the reason why they are getting more expensive. Finally, Bitcoin. So Bitcoin has been in a bear market. We've been selling it short. So short. Where do we sell short? At the red line once it gets there. I think now, and Bitcoin, notice this big range from June of this year until present. Really, it just really didn't go anywhere. Kind of traded sideways. Maybe, I mean, definitely because of the way US dollar was getting stronger. BTC divided by USD, same thing. It's a currency pair. Now the dollar may have tapped. It's reasonable to say that Bitcoin will break higher. Especially notice that we have broken out above this pretty long, again, just bottom from mid-September until now. So that's a good chance we're gonna go higher on Bitcoin from here. Even though until recently I was quite bearish, now I'm looking, it's possible we're gonna go higher. I'm not gonna just marry to one side of the equation. All right, head over to MasterChartsTrading.com, click on sign up for one of the products. Trading indicators are these lines on the chart. They will help you pretty much trade anything you want. They are available for this interface, TradingView.com. You can have a free TradingView.com account, and then once you sign up for TradingView, come over to my site, sign up for my indicators. They're $29.95 per month, and then it will help you trade pretty much anything under the sun. If you want newsletter, I send out daily alerts and my ideas about what's going up, what's going down. Also weekly newsletters, video recaps for members only, also available on weekly basis. If you want both of them, I think it's the best deal. Get $59.95 per month. Subscribe via PayPal, Google, Apple Pay, credit cards, etc. Alright, that's it for this week's recap. Again, please don't forget to hit the like button. It's very important. Thank you for watching, and have another great trading week. Bye-bye.